still we worry a lot what is going to happen with banking sector now. What is your opinion? Is still music playing, or it is going to stop quite soon?
About the banking sector, what I see is that the banking sector is changing dramatically. The last 10 years, if you look back at 2006, for instance, interest rates were very low. They are still very low in countries like European countries, in the United States. It was easy for banks to borrow money. But if you look back at 2006, it was for normal people very easy to obtain a loan, for mortgages, for instance, or for personal loans to buy a car or whatsoever. It was actually too easy. Nobody was seeing the risk. People in the Netherlands, where I come from, they were thinking about buying a house, immediately buying a new car, buying a TV set, all being covered by this mortgage that was provided by the bank. It was just too easy. We did not see the risk. At this moment in time, it's the opposite. We do see the risk. Maybe we see too much risk. But what you see actually is that now interest rates are still very low, but it is hard to obtain a loan because banks are not willing to provide loans to small and medium-sized companies. And that's because that banks are rethinking risk at this moment in time. And they are rethinking, they have to rethink what their position is in the market. That means at the same time that it is difficult to obtain a loan for your company. But you see, at this time, what happens also in the Netherlands is that other alternative banking companies are starting up. Some smaller companies focusing only on small companies, for instance. Private investors who come up with initiatives to finance entrepreneurs, for instance. So actually what I see is that the whole banking sector is changing. But this reshaping of the banking industry is going to take a long time. Banks have to rethink themselves, the strategies, what is their core business. And that is something actually that is going to change.
Stock markets. They have been growing so fast in the first quarter of 2013. And the growth rate was around 10-12%. But recently it started to move down.
Yeah.
What happened actually? Are people too optimistic, or maybe economy is still has facility to grow and to speed up?
Yeah. What worries me basically about this recent trend in 2013 is that you see indeed that the markets went up quite fast. And at the same time, well, we have these measures for, we call them implied volatility, but that's difficult. But let's say perceived risk. And these perceived risk measures were very low, historically very low. Where normal levels were at, let's say, long-term 18%, they were now at 13%. So we had a fast increase in prices, and at the same time people felt that there was not much risk, which to me is pretty much the same feeling as what we had in 2006. Fast growth, before 2006, fast growth of equity markets and low perception of risk. So same, in my point of view, people keep on thinking about the short term. They really want the economy to recover. At the same time, it's not the crisis, not that let's say money disappeared. People still need to invest somehow. In the Dutch market, we have a very strong pension fund system. These pension funds have to invest. And they invested, well, in so-called safe havens, maybe gold or maybe whatever. But actually what you see is that has been some kind of a temporary strategy to park their money for a while, right? And once they think that let's say, not only pension funds, but also private investors, that once they think that the economy is maybe going to recover, they immediately switch back to let's say, stocks or whatsoever. And they might switch back to safe havens if something else is happening. So there is a relatively low perception of risk, which I think is not good, right? Again, we have the tendency to underestimate risk. And that actually what happens is that, although we think that the market is not less risky, right, it's still at the same time we are very short-term focused, that if there is some potential threat, we immediately move it to another market. I'm not pessimistic about stocks at all. I mean, what I'm pessimistic about is that the way we looked at stocks before 2006 is that we all were thinking that stocks would make us rich easily. All right? So we didn't have to think about it. Just buy stocks and it will do its job.
So what do you perceive as safe havens now, or in other way around? In which stocks you would invest yourself?
Yeah. Well, how I see stock investing is that if I buy a stock, I actually buy a share, an equity share in a company. And suppose that I would do that in the share, well, suppose that I would buy a share basically in the company of a friend of mine. I would look at that friend and I would say, like, is he a good manager to really, make this company grow in a long time? Right? Is he capable of making good investment decisions or good decisions during times of crisis? And so I will make this judgment when I invest in this company of my friend. But if I buy a stock, right, on the stock exchange, I actually do the same. I buy a stock in a company. So how I see stock investing is that I want to look at the management of the company. Is that company capable of having an extremely good management? Can they change management on time, for instance? Has this company proven itself to, for instance, to make good investment decisions also in times of crisis? I think a very good example, a company that I like very much, is Philips Electronics from the Netherlands. I think 5 years ago they decided to sell their television activities or to cut down on their television activities. And a lot of people in Holland were saying, like, well, this is pretty much the end of Philips. But then I, at that time, had to go to a hospital, and you look in the hospital, and all kind of medical equipment was Philips on it, Philips. So actually, quite silently, this company has changed, its vision from producing television sets, which market's now being taken over by the Samsungs or something like this. And actually, they switched silently to a different market. And I think this company has proven over time, in the long term, that they have been capable of dealing with all kinds of, changes in the markets, investing in niche products. And I think that's what you want from managers, and that's what you want from an investment in a company. So safe havens, I think gold is always a strange safe haven, because what is really gold? You cannot do anything with it. Gold is also a perceived value. It's because we like it, because we like the color. We give it to our wives, basically. But again, it's a perceived value. You cannot do anything with gold. It's soft. Right? So for me, I think if I would invest money, I just would still buy stocks. But you have to think carefully what you buy. So no short-term oriented companies that want to make fast money or something. It might be a very good success in the short term, but that will be luck. Right? But if you want to think about the long term, you have to think about skills, and then you have to think about skills of management. And that's how I look at investing.